Hello and welcome. I've got Aiden Kelly with me again today. Aiden, welcome.
Thanks, George. Good to be back.
Excellent. Now, tonight we're going to be talking about super.
Yeah, very important topic this time of year. June's always a time of year where everyone reflects and looks at end of financial year activities, and superannuation is a big part of that. So a lot of conversations happening this time of year around what to do with super considerations, and obviously we've got some changes coming in July too.
Excellent. Okay, so what's happening in July? And
Yeah.
let us know.
So in July, the concessional contributions cap, which is the cap that employers put into and salary sacrifice fall into, increases to $30,000 a year. It's currently at $27,500, so it's increasing to $30,000 a year. So certainly for contributions and deductible contributions that offset your personal income, it does give us a little bit more of a cap, push more money into super.
Mm-hmm. Yeah, great. Now, superannuation. A lot of people ask me the question: is how safe is your money in super? Right?
Look, it's a very safe asset. It's a structure that it's designed for Australia's retirement and get past 60 to be able to use it. Now, what it's invested in, what it's used for, that takes a lot of work to understand that. And for most people, the superannuation we invested in a few things. Could be shares, it could be bonds, it could be a little bit of property as well, or a mix of both. So, how safe the super is could determine how much risk you're taking and what you're actually invested in. But for a lot of people, it's something that is always at the forefront of considering and reviewing. But we find that again, this time of year, it's something that we're doing a lot of is checking in and making sure that how it's performing and what you're invested in. And certainly around the world with inflation and those type of activities happening warrants certainly a review on what's actually happening with super. But yes. How safe is it? It's designed, the Australian system's designed for retirement. But yeah, look, the sooner you look at what it's doing, how it's performing, the fees, obviously the less risk we have to take in later life to make sure that it performs for you.
Yep. So superannuation is almost like a piggy bank.
Yeah.
It's not a physical piggy bank,
No.
right? Because it's structured in law, but you can't touch your money till you're 65. So you put your money inside your piggy bank, but you can't cheat and go in there and take it out, right?
Correct.
So it's like forced savings.
Absolutely, for savings. And one of the other changes, George, is we're seeing the superannuation guarantee increase to 11.5%. So that's going up 0.5% from 11. So an extra 0.5% from salary will be going into super from 1 July.
Yeah, and I guess as a business owner, that's tough because it comes out of the business's pocket. The government's not paying you this, the business is. So practically what the government have done is, because we've got a lot less younger people in the workforce and our demographics is we've got more older people than young people. And we've never had this in history, have we?
No, it's a very unique time, and we talk about immigration, and certainly in the budget that happened a couple of weeks ago, there was a lot of talk around immigration and student impact on education and things like that coming into Australia. So yeah, look, it is a very interesting time, and super for a lot of Australians is that retirement structure that from 60, if you stop work, or after 65, becomes this from a structure point of view, becomes this really efficient source of an asset that you can draw down on. So it's really at that point in time one way of replacing your income. And now, obviously, there's other ways of managing and replacing income, property being one of them too. So superannuation is always a very balanced structure that we see in anyone's financial journey and plan, something that a lot of planning around and consideration for how we might want to use it in the future and what income we might want to replace.
Yes. And look, for the average person, super is a very smart idea, because if you're not sophisticated, you don't know how to make money in other ways. This is one way of doing it and guaranteeing it. And I suppose the government saw early on that they could not provide pensions for everyone.
Yeah, correct.
And they thought, okay, why don't we make all the businesses provide pensions for everyone instead of us? And that way we don't have to do it. So it was a great way of passing the buck, but it is here now. And I suppose whatever tool you've got, you need to use it to its best ability, because whether you like it or not, you've got super. If you're an employee in Australia, because some business owners don't pay themselves super. I know they're supposed to, but it's tough, and a lot of business people don't. But employees have to get it because it's just the way it is, right? Because it's actually against the law to hire someone and not pay their super.
Yeah.
So people are forced into savings. They're getting this money. So if you're going to get this money in super, you might as well maximize it and do the best you can. And that's where people like you come in. Is that correct?
Absolutely, George. Yeah. So the earlier we look at any investment or any investment journey, so whether that be in your 20s or 30s or 40s, the earlier we look at these type of structures and figure out, okay, what's going to be the investment journey, the less risk we have to take over that time period. Now, unfortunately, all too much in our roles, we unfortunately see people that are 1 or 2 years away from retirement. Now, there's always still value we can add and things we can help with, but if we had an extra 5 or 10 or 15 years of value that we could work with and help advise and restructure and make sure we're invested in the right areas, then it can make a very big difference over that time frame. So, for anyone out there tonight, please reach out. Let's have a look at your super, see what it's doing, understand what it's invested in.
Yep. So if someone's got working for a company and they're in industry super, what's the benefit of talking to you?
Oh, look, one, transparency. We can really clearly and quickly provide a detailed report on what you're invested in, what the cost of that investment is, and that super fund. And another area that has certainly changed over the years is also insurance in super too. And most industry funds and super funds out there provide complementary insurance subject to sort of requirements. But it is a very area that we want to look at and understand the fees, the costs, and performance too. The regulator even now, George, every year looks at the My Super products and does a performance test to make sure that the super funds are actually performing.
That's a good thing, because
Absolutely, yeah.
with inflation at the moment, I guess a lot of people are worried, is their super going to keep up with inflation? Because if it doesn't keep up with inflation, then it's a zero-sum game.
Yeah, absolutely. Yeah. And from an insurance point of view, risk management is we talk about, growing wealth and protecting your assets. And, for most people out there, the biggest asset is themselves and the income. And now if income stops, so does super contributions. So it is a very important part to manage in a plan, to review what it's invested in, is it working? And then also, are we protected in the right way?
Yeah.
But yeah, this time of year, I guess one of the other spots that from an annual contribution point of view is that most super funds, large industry funds, do shut down their collecting and processing of contributions, normally towards the end of the month. So again, if anyone is considering making contributions or it's part of your plan, it's something that we certainly want to look at well before the end of the month, just because of time frame and the super funds actually reconciling those contributions coming through.
Yep, exactly. So bit of property news while we're here is what's happened is construction has fallen into a black hole. So new home sales, residential construction values are at cyclical lows with significant builder insolvencies. What does that mean in plain talk? Well, no one's buying brand new properties. 2, no one's building brand new properties. And there's a lot of builders going broke. We've had more builders going broke over the last few years than ever. So that's a big constraint on property. And because of that, we all know about the supply and demand equation. Because of that, it's going to put even more pressure on property prices because there's lack. And they spoke about immigration during the budget.
Yep.
And, Labor and the Greens, they love immigration. They're big fans. They want to really they've got a big Australia policy where they want to have Australia to be double the population. They want us to have 50 million people in Australia. Imagine that, 50 million people. That's a lot of people.
It's a lot of houses to build, George.
Yes, I don't think it's going to happen, definitely. And I think the Liberals prefer to tone that down a little bit with the immigration and cut it down, because in the last year, we've had the highest net immigration in history ever, which is pretty crazy. Yeah, so there you go. What do you think is going to happen with the RBA? Because inflation's still a bit high. What do you think?
Yeah.
What are they thinking?
Yeah, well, look, it's the markets certainly think that we're probably going to see a slight increase in the rate, and but I don't think seeing when we look at cash flow considerations and most clients and from a lending point of view, the banks are still ultra conservative on their assessments. I think we're my personal opinion, I think we're probably going to see a slight increase in the rate at some point, just because inflation is still slightly around and increasing.
Yep. Nick says concessional amounts to super were up to 50,000 until 2011. Then the government changed it to 25,000. Another reason why people won't have as much super in the future, because of that time delay.
Yeah.
What is it now?
Well, so right now, 27,500, going up to 30,000. So yeah, Nick is right. They, back sort of 2011 pre, there were different rules around, annual contribution limits based on income and things like that. So it's now one limit for everyone. In a
Yeah.
way, it's simplified it, but sort of yes, has capped a lot of the deductible contributions. Yeah.
Yeah, that's the thing with super, which I find a little bit troublesome, is they keep changing the rules.
Mm.
There was zero contributions, then 15%. They're changing it around, and now there's a certain. If you have over a certain amount of super, you have to pay tax on it. Is
Yeah,
that
look,
right?
there's a couple of rules there, and one of the one that sort of keeps sort of going around in circles is the total super balance of $3 million or
Yep.
above. So, surprisingly, there wasn't too much discussion of that in the budget. I thought that we'd see a little bit more discussion around that, but that's still sort of going through legal assent and until
So
it sort of goes through.
what exactly are they trying to do?
Yeah, so they're basically saying that if you have a total super balance over $3 million, you're not going to get they're limiting it up to $3 million in the concessional amount in super.
Oh, so then you have to pay tax on anything over
Well,
3 million.
so you got your total super balance now, which from when we go into what's called pension phase,
Yep.
which is currently around 1.9 million. So that's how much you can have into your sort of pension pot of tax-free earnings. $3 million and above, they're proposing is where the total cap will be for
Okay,
having
three million in annual earnings or 3 million in assets.
3 million in assets, and they're also
Wow, that's
talking,
very small. Not
yeah,
much.
and then they're also talking about taxing any amount over the 3 million unrealized as well. So typically, the capital gains system in Australia works on realized capital gains. Right now, they're talking about unrealized gains as well. So there is a lot of
Really?
work to do in
Wow.
that space. Yeah.
I love this government. They're bringing some beautiful rules here in
Mm.
taking money off the people. I'm being sarcastic, by the way, if anyone's listening. So look, what I did over my years is I didn't put any money in super because I own my own business, and I put it in property. And I'm sort of glad because they keep stuffing around with super and doing things. So I'm not a big fan of putting money into super, but I'm a big fan of getting the money you got in super and making it work.
Mm.
Because the challenge with super, it's a little bit like monopoly money because you can't touch it. The government may decide to tax it or do whatever with it, all at a drop of a hat, and you've got no choice. At
Mm.
least if you've got money in property and in the bank, it's a little bit safer. Now, the government's attacking that as well. That's the fact of it. So you look at Victoria now. Victoria have changed their land tax laws.
Mm.
They're calling the COVID tax. And what they're doing now is they're trying to because the Dan Andrews government totally destroyed the Victorian economy
Mm.
so badly that it's the biggest. They're in massive debt. They're in massive financial problems. And what they're trying to do is get the money out of property investors.
Yeah. Wow.
Yeah. So what's happening with a lot of people is they're leaving Victoria in droves.
Yeah.
Um,
Coming to places like South Australia, George, where we are, we're definitely
yeah.
seeing that
Yep.
influx.
Yep. And Queensland because it's
Mm.
warmer. But even Adelaide's warmer than Melbourne and things like that. That's what's happening. So Harry Wilson says, is there a way to get money out of super or opt into getting it into property? Good
Yeah.
question, Harry.
Yeah. So, Harry, look, the only ways to get money out of super are when you're retired, but there are ways of investing in property before you retire. So, ways to invest in property, considering a self-managed super fund where you can take control and, look at acquiring property in a way. Now, there's a lot to do to review that. And, we go through a very structured process and advice to make sure that it's suitable because there are, from cost implications and looking at running the fund, we really want to sort of understand that. But yes, Harry, there are ways of investing your super into property.
Yep.
And
So, yeah,
and
keep
if
going.
George, if you don't have the balance, then certainly you can also look at investing in property in the share market too, which a lot of the industry super funds and things like that also do have.
Yeah, but what I love about property is you can invest directly and you control it all, and
Yes.
it's all about control, taking back control. And
Yep.
I think that's what's so good about having. Because I think it's really good in the short term. They can go to a person like you and go, okay, grow my super big enough.
Mm.
Therefore, I can get a self-managed fund. Because if your self-managed fund is not making enough money, then it's just costing you money, and you don't want
Yes.
that. So what you want to do is get a self-managed fund that's going to make you money, and then big enough. And how much do you need to buy property in super in a self-managed fund?
Yeah, look, the balance is around starting from about 180 to 200. We're seeing nowadays, particularly, again, talking with Nadine from the borrowing side, George, when we look at, self-managed super funds and buying property, it comes down to cash flow and servicing. So making sure you've got good contributions coming from employers coming through. Do we have the ability to put any other contributions in? So right now we're seeing that, self-managed super fund to buy property, there has to be a consideration for strong contributions to come through, or other investments in the fund, like you said, to grow it to a point where the other investments in the fund are providing an income stream as well.
Yeah, and the good part about super and getting a property in super is one, I think property is very safe,
Yeah.
safe as
And
houses, but
And
also,
George, we saw,
yep,
sorry,
go.
we saw an article a couple of weeks back. I believe it was in the Australian or AFR that had a look at the numbers of new investors in property and the trend to seeing more considering self-managed super funds, and on the basis of personal serviceability was becoming a little bit harder. Where we saw multiple income streams going into super that was able to serve. The numbers showed that a lot of people were considering now from a contribution point of view. It just made more sense. So.
Yeah.
I think we've seen those trends.
Can you explain the multiple income streams? A lot of people won't understand what that means.
Yeah, so multiple income streams. In terms of a self-managed super fund, you can have up to 6 members now inside a self-managed super fund. So we're seeing a lot of families invest together, pulling their funds together, pulling their income together to invest.
Yeah, because
Very,
a
very
mother,
powerful.
a husband and wife can do it with their super,
Yep.
or they can do it together with their kids, or you can do it with brothers and sisters and everything else like that.
Absolutely, yeah, and it doesn't have to be just mum and dad or mum and kids. It's we have had instances of friends working together. Now, naturally, there has to be a very strong exit strategy and different ages and longevity of income streams and pensions. But again, families working together, people working together, and compounding wealth, compounding income can certainly help grow super.
Absolutely, because then if you don't have enough, get 3 or 4 people together, then suddenly you got enough, and at least you've got an asset that's going up in value, and it
Yeah.
works. Carpenter said, SA is abolishing stamp duty for first home buyers. How will that affect investors? Good question. It's not going to affect investors because first home buyers, having the stamp duty abolished is not going to change the market considerably at all, hardly at all. It's not like the first homeowners grant, everything else at the time, because the first homeowners grant was quite considerable compared to the price of property, where the stamp duty for a first home, what you're saving is very negligible, so it's not going to make any difference.
Yeah.
Okay, Harry says, now that is clever. Pooling super together. I believe there's something to do with extra contributions that you put in on top of the ones your employer does that you can use for investing in property. Is that also correct?
Yeah, so Harry, that's the deductible contributions that you can put in outside of your employment or salary sacrifice to increase your servicing and contributions. And those contributions can also be tax deductible to you too.
Yes, and you don't have to, depending on how much you've got. You might have to, depending on your borrowing capacity and the people in the fund.
Yes.
Because if you earn good money, your employer contribution, especially now it's gone up by. So in 1st of July, this is interesting, Aiden, because I've just worked something out, which is really cool. So super is going to go up by 0.5%.
Yep.
1st of July.
Mm-hmm.
Therefore, people's cash flow in super is going to go up 0.5%, which is going to change their borrowing capacity. So everyone in super, their borrowing capacity is going to go up in the 1st of July.
Probably would.
Yeah, definitely, 100%. They're going to change the calculator because that's what they do. So what's happening is because the tax rates have changed slightly, on the 1st of July, people can borrow more money, up to 5 or 6% more. So I'd imagine this is going to have the same effect in super, which is good news for everyone.
Absolutely, yeah, absolutely. And I think we'll be able to see that from 1 July.
Yeah. So what I would do if I was in super and a self-managed super and I wanted to borrow money and get a property, I'd get involved now in case they put rates up in the future to get in now with these rates beforehand. Because what's going to happen is, as you said, inflation's gone up and the RBA want to put the brakes on inflation, even though I don't agree with how they're doing it. And what they're going to do is they're going to go up in rates and then they're going to drop it anyway. So Bacadzi, super is capped at 275,000 per member through, isn't it?
Yeah. So 27,500 this financial year moves to 30,000 from 1 July. per member. And that's your deductible contributions, or what we call concessional contributions, which is your employer contributions, any salary sacrifice contributions, and any additional deductible contributions you make up to that limit.
Yes. And look, 27,500 is more than enough to get a property. Like, most properties are only going to cost you a couple of $100 a week negative. So you don't need that much. So this would cover it easily. You don't need more than that anyway. So we're covered there anyway.
Good stuff.
Any final thoughts before we go to our private group and do our Q&A with our members in the Positive Property Inner Circle?
Look, I think final thoughts, that time of year, always on the top of the mind. So, I think go make sure you have a quick look, review. It is coming towards the end of the financial year. So, get your skates on before the super funds decide to shut the doors for the year.
Absolutely. And thank you so much for watching. We're going to be here at the same bat channel, same bat time next year. Well, next week, not next year, Aiden, you're going to come join us every now and again. I think you're going to be coming in monthly, talking about super and insurance and other things like that. So thank you for joining us.
Pleasure.
I'm actually moving to Bali on Monday. I'm like, I migrate like those birds from Europe, go to a warmer climate during winter, and I'm going to spend winter in Bali, and then I'm going to Fiji, and then I'm coming back for spring.
Wonderful.
Yeah, because it's been damn cold. This last 2 weeks have been freezing,
Yeah.
Excellent. Thank you so much. I'll see you at the other session. Cheers, guys. Thank you.